Q2 GDP came out at 7.5%. What do you make of the results?
Well, I think it was in line with consensus. I think one interesting thing was the monthly data that came along with the GDP data, because industrial production, which probably is the most correlated with GDP, that fell below 9% in June. So it's suggesting the high frequency data that maybe we're going to see continued slowdown into the third quarter. The other interesting thing, and the positive maybe silver lining on this, was the stronger than expected pickup in retail sales to 13.3% growth. So maybe, we are seeing some signs of rebalancing away from investment towards consumption. That's the positive. But I think the basic message is those that believe China's economy is slowing down, that view remains intact.
Which camp are you in?
We're in that camp, and we're most likely going to, we're looking at the numbers, but we have a mind to revise down our longer term forecasts as well. We have currently 7.5% growth for 2014. We're probably looking to lower that as well. I think two things to distinguish here. One is, this is, China is having to go through a whole deleveraging process, and deleveraging process is typically negative for growth, and it's not just for 1 or 2 quarters. It takes time, as we've seen in other advanced economies. The other thing is China's potential growth rate is also slowing, and that's an additional factor because of a shrinking labour force, because the massive amount of investment China's had in the past, that's starting to be less than before. These factors are also weighing on potential growth. So potential growth slowing, deleveraging, we think is going to start to continue to sort of slow growth, not just for this year, but into next year for China.
And what are the implications for policies?
Well, I think the implications for policy near term is we still think it's best to keep the broad policy measures on the tight side. The biggest danger we see for China is just because growth is starting to ease off, they suddenly relax all the monetary tightening measures, and we start to see debt building up again, the property market taking off again. And that is very dangerous, we think, because already the financial cycle is looking pretty excessive. And that can lead to a very severe recession if you have a crisis there. So we think it's better to remain firm. It is sacrificing some growth in the near term, but it's better for China's longer term prospects.